Gold weekly analysis. Last week we saw gold price dropping down to 2680 zone before trying to further drop down. It made a retracement back till 2630, which was previous support area, which is acting as a resistance. So this drop which we saw before, it might be a breakout or it might be a fake out breakout, but in short, gold retested 2630. Last week before the FOMC, we saw gold before the pre-FOMC make a drop. Before that, we saw an upward momentum FOMO buying, which was of course because of China's stimulus package announcement, which led to the FOMO gold buying. And before the start of the previous week, FOMC meeting, we saw a huge drop followed by FPPI, and that drop was more of a what do you call sell the rumor and buy the news kind of fact. But as soon as the FOMC press conference started, we saw gold price further drop down, and as soon as it ended, we saw price making a rebound back to above 2600, followed by a small retracement. So, in short, before the FOMC meeting, we saw a crash, and afterwards, we saw a retracement. So, for all the intraday traders out there, if you are trading intraday, you have to keep an eye on 2671, 2654. This is your intraday golden zone. Price will more likely to retrace back within this zone. So you have to manage your risk and reward. So you should be trading within this zone. And if you are using Fibonacci with the help of Fibo, the next week you can trade gold within this zone. If gold is able to break below 2620 again, further touching 2590, you might have to sell the news, because if gold is able to drop below this level, the next support zone will be 2530. But also on last Friday, we saw that lower PCE data, which led to what do you call a slightly less inflation print, led to the slight retracement of gold. So in short, intraday traders should see a range between 2620 to 2671. Trade within this zone. Price is more likely to retrace to this zone 2671, 2654. And this is your intraday high, and this is your intraday low. Intraday low is 2580, 2583, and intraday high is 2671. Besides this, last week we saw that all the mining shares, especially the Barracks and Newmount, they are already oversold and they're further dropping down. Which is leading to a lot of concerns that was the short sell, and it's quite oversold. It might be trigger a buyback. So keep an eye on that. Manage your risk till 2670. This is just the 2671. This is a really important zone. We saw that as soon as the rate cut was done, after the rate cut, it was just price just led up, and after the lower PCE, it's clear that Fed made clear that next year they're gonna do 2 rate cuts. Also, one more thing, on Wednesday, when they did the rate cut, S&P 500 dropped down. That was the biggest drop since April, which led to nearly $2 trillion that were wiped out from the stock market. Dollar pumped up. US 10 years treasury, they were rising, which was a concern, which was the biggest concern, that inflation is rising. And I said in my last analysis that inflation is rising and Fed is ignoring inflation, while its only target objective is to pump up the labor market. And in 2025, in January, as soon as Donald Trump takes over the office, the number one concern for a lot of people is, especially new trader, is okay, Fed has done the rate cut. What's gonna happen next? If you remember the first rate cut it did, after the rate cut, price dropped down, and after a certain drop, it just went up because of the same fact. Buy the rumor and sell the news. As soon as the Fed rate cut news is in the market, they just sell the news and buy the rumor, then keep on buying. And with the current geopolitical situation, the narrative developing in Syria, I think that is most possibly a new war front that will be open for 2025. And 2025, Trump, as soon as he takes charge of this office, you guys know what's coming. Tariffs, tariffs on China, Mexico, Canada, and a bunch of other countries, which will, of course, lead to rise in inflation in third world countries, including America itself, along with geopolitical tension. Russia and Iran might try to open up a new war front. Of course, they will, because uh, that rebel group, you guys know previously where what that group is. They America just whitewashed that group, and they're just ISIS and Daesh and Al Qaeda whitewashed into rebranded into a new group called rebels, and then that's a concerning thing. And a huge war is gonna happen. I think a greater war, more terrible than the Palestine, and that is also ongoing. But this is something which is gonna impact a lot of Middle East. Most likely, this impact will be seen on oil and gold, more on oil. Anyways, Fed also said not to worry, because they knew because of this next year potential new for geopolitical tension is gonna lead to higher oil prices, which in return is gonna increase inflation. So that said that we're gonna keep the rate cut low. So yeah, so let's move on from our 4 hourly to 1 day intraday analysis. Oh, sorry, one day one chart. And on day one, as you can clearly see, we had a straight trend line. We saw that gold previously he tested this trend line, went down below, and after hit reaching around 2660 previously, followed by 2560, 2520, it just went back up, and this time gold went to as low as 2580 last week, and we are seeing a correction. Mostly we have a new sideway range on day one time frame, where that is between 2800 to 2530. As long as the price is trading within zone, we are safe. And just like before, like almost a year ago, we had a range that was 2000. Between high was 2000, low was 1600. This year, this year December and next year, we might have high 2800 and low 2530. So we have to trade within these two zones. The price will not magically fall below 2530 without an intervention by Fed, or something is going to happen which will lead it to drop. So we'll be aware if something like that happens. And also the FOMC dart plot, which was what do you say, if you remember, the last time it happened was 2021, and as soon as the dart plot was made public, gold dropped down. It was a huge crash, but yet again this time it seems like it's going to happen the same. But after that drop, there was a huge pump. We are within the zone, and people were asking how much the drop is going to be. Drop is going to be in between $100 to $150. We already saw that coming in, but especially I think that drop is over. Now we are just heading towards 2700 range, back above 2800 range. And traders, especially new traders, likely have to focus on the top. Yeah, I know mostly people are saying now we have the top, this might be our bottom or reversal, but you have to understand that if you are following the COT, which is called, if you're a new trader, commitment of traders, is a report which consists of volume of number of buyers and number of sellers. So if you look at that, we saw that there was a huge buying. What do you say? What do you say? When gold dropped down recently at this price, there was, marriage season in Asian countries, especially if you're from China, India, Pakistan, Bangladesh, Sri Lanka, neighboring countries, Arab countries, Persian country, or whatever, So there's wedding season, so the gold demand went up. So likely the full potential of what do you say? The gold demand potential will not come back till the mid of January, because as soon as Donald Trump will sign those tariffs, those tariffs, that's gonna heavily influence the metal market. So upcoming weeks are really important, especially this week. This gonna come up. It's gonna be lots of holidays. Christmas is around the corner too. So yeah, to all the what do you call to all our subscribers out there, Merry Christmas in advance, and have a nice week. Enjoy it with your family. This year was a really nice run. We all made profits. We had our good days. We had our bad days, but we had more good days than bad days. So looking forward to 2025. Just before I go, please keep an eye, since there is no big news. There's in the from coming out from US, and so likely, cover your risk to reward, cover your risk, cover your trades, and be really careful, because last monthly candle was bearish. And although a lot of people are shorting right now, especially new traders, you have to understand, stick with the plan. No long trades till we actually enter into 2025. So keep it simple, keep it short. I'm leaving now. Thank you for watching this weekly analysis. One more thing, the uh, I'll be updating more stuff regarding crypto analysis. I did a Bitcoin what do you say crash alert, so I'll be updating that video soon tomorrow. So yeah, till then, take care. This is Pro Wolf Trader signing off.